Good afternoon, good evening, everyone. Thank you for joining us today for our latest portfolio presentation. This is our portfolio 17. My name is Romain Danielo, co-founder at LandQuire. LandQuire is a private equity land investment platform looking to help LPs all around the world to invest in off-market land deals on which we can bring value through entitlements and resell to developers or retail buyers. I will share my screen and get started to share this latest land deal of 97 acres that was put under contract recently by our head of acquisition, Willem, that will be presenting the numbers today. "97 acres, 39 hectares. We will subdivide these parcels into 142 lots of half acres. There's a couple 1 acres as well. This is our latest pre-conceptual here that you can see on the bottom right that was done by our engineering firm. We are looking for $4.8 million to acquire the land, do the entitlements, run the roads, utilities, in order to sell finished lots into the market. We're located 30 minutes away from San Antonio. We have a couple hundred of acres that we already acquired that are running through entitlements. LandQuire is very familiar with the San Antonio market. And for this specific portfolio, we're raising with a minimum of $100,000 per investor. You will see that only 52% will be needed at signature and 48% will be needed after the completion of the entitlements a year from now. On the brochure that you will receive in your email and in the chat, you will be able to click here and have access to the data room and here for the pro forma. The goal here is to entitle the parcel and either sell at a paper lot basis to a developer in 12 months or to carry on the development of the road, the electricity, and the water in order to sell finished lots to a developer, B2B, or to multiple retail buyers, B2C. Again, here you have the data room, the pro forma, the Google Map pin of the property. You have the latest pre-conceptual plan, and you also have our task planner, which is our Microsoft digital tool for you to follow along the entitlement process. Just a brief background about LandQuire. Our why is to leverage data-driven insights by addressing the American housing crisis to create sustainable and innovative land solutions that meet the city guidelines and the municipal goals. Our mission is to provide individual and institutional investors access to high potential alternative land investment in the US. Over the last 4.5 years, we raised $39 million of equity, people that invested directly in our club deals. And you will have access to our track record on page 7. This is our 14th PUD, meaning planned unit development, meaning a parcel going through an entitlement process. The American housing crisis is obviously known all around the world. We have between 2.3 and 6.5 million homes missing to get back to an even supply. A lot of developers that failed during the 2008 crisis never actually went back in business, and it created a undersupply of housing units. And the fact that a lot of the demographic today are moving toward Texas is obviously a good sign for us to actually solve that problem and keep sourcing off-market land deals. Some example of our recent sold projects. One of them that is very similar to the deal that I'm presenting today is the Bowie, Texas deal that we sold in 30 months and generated 115% on the deal. This was a regular single-family residence subdivisions of 34 lots that we accomplished and resold paper lot basis to a local developer. Some of our current projects that we have in the San Antonio area, we currently have 5 portfolio that are going through entitlement. Portfolio 11 is actually getting done this month. Portfolio 13 is actually getting sold at the end of the year. Portfolio 12, we have another 90 days of entitlement. Portfolio 15, we're starting the entitlement. Portfolio 14, we are right in the middle of the entitlement. Again, for people that are not very familiar about land investing, you can either acquire raw land and sell it on a paper lot basis, or you can also sell it on a finished lot basis. Here, we have the option of doing both and generating an above average IRR for both scenarios. We will go over the numbers shortly. Our local engineering firm is called LGA. They are actually nationwide. The San Antonio office has been really good to us over the last 24 months. They've kept their deadline and their budget on every single entitlement project. And we're happy to actually introduce you to the person that is running entitlement for us at LGA. This is really a weekly follow-up and a weekly meeting that we have with them to make sure that we are not falling behind the timeline, which is anywhere between 9 to 12 months, depending on the project. Our investment process at LandQuire is very similar for every single investor. We basically help you to choose the deal that you like based on your appetite toward risk and the upside that is obviously very clear here. We help you open a personal LLC if you need to. We help you obviously with quarterly real-time management information project. You have access to Agora, which is your investment portal that give you all those reports on a quarterly basis. We help you in terms of the signature of the contract. If you need help with your attorney, we're happy to jump on a call. We help you with the distribution letters, as well as opening a USD bank account if you're offshore. We manage, obviously, the accounting. Every single investor receive a K1 at the end of the year based on the distributions or the shares that you acquired in the SPV that own the land. And we communicate as well with your personal CPA if any question arise. Here, the land will be acquired with our LQ Investment Portfolio 17 LLC. These LLCs are created in advance for the sole purpose of being able to sign contracts and to gain time. We are acquiring 97 acres. The entire parcel is usable. We're located in Seguin, Texas, which is 30 minutes east of San Antonio. The general managing partner here is LandQuire Management. We're today 35 people working full-time. Like I said, the goal is to acquire, entitle, and then either sell on a paper lot basis or actually build the road, the road and the utilities in order to sell finished lots. The financial models will be explained in a moment. We're intaking $100,000 minimum from accredited investor. We are offering a 10% pref return. And on top of that, we're offering between 55 to 70% of the profit, depending on your ticket size. The capital call here, there's two. One is at signature. We need 52% at the signature in order to acquire the land and to run the entitlements. And then we need 48% a year from now once we're done. The 48% will be officially required from an email that will be sent to every single LP, and then you have 45 days to actually make the wire so we can keep on going with the project and the construction. You're acquiring here shares, preferred shares in the entity acquiring the land. The target IRR is between 22 to 38% with an horizon exit between 24 to 36 months. LandQuire contractually gives 100% of the proceeds to investors if we did not sell the land after 60 months. On this slide, you can click at the bottom left here and have access directly to the property location, the pin, so you can check around what's being built. The latest pre-conceptual has been received Monday night. We're currently at 142 lots. with some flag lots in the back, some 1 acre lots in the front. And the seller decided to keep 4 acres in the front where his homestead is located. For people that are outside of the US and are not very familiar with Texas, Texas has been the fastest growing state over the last 5 years in terms of median home price, in terms of GDP growth, in terms of population growth, as well as infrastructure growth. San Antonio is obviously the most affordable city comparing to Austin, Dallas, and Houston. Even though it's a more affordable city, you can see here that the population growth has been faster since 2019 than the other cities. In terms of Seguin and looking at a close location of the property, you will see New Braunfels has been the fastest growing city in the United States in 2024, and Seguin is the 29th city in terms of demographic growth in 2024. We can see that the population increased 31% since 2020, and we see a lot of different projects being actually acquired and developed by developers. Paul, our head of marketing, will send you an article in the chat so you can take a look a little bit more deeply what are the KPIs and figures in terms of the future of Seguin. Again, here, some specific project. We have the municipal golf modernization. We have a lot of project to revive the downtown area. We also have a lot of strategic land grab that is happening along the I-46, which is basically between New Braunfels and Seguin. Our property is located right on the I-46 and is a very strategic location for a developer. In terms of the project analysis, we have Seguin as a high growth area between San Antonio and Austin. We have as an LP 10% pref return and between 55 to 70% of the profit sharing going to LPs. We do not have any senior or junior debt. There's no debt on this actual offering. This is a non-levered land investment, okay, which reduced the risk to a maximum. We have a project that will take anywhere between 9 to 12 months to entitle, and then another 90 days to 120 days to extend the road, the water, and the electricity. Very minimal construction, and from there, we're looking to exit fully the project between 24 to 36 months. The minimum ticket, again, is $100,000 with an easy resale to a developer or to retail buyers. Distribution of the equity, very similar to all our club deals. 100% of the capital invested from LPs is going back to LP first. We then distribute a 10% pref at exit. So basically, if we sell in 2 years as an LP, you get 20% of the first 20% of the return, and then we split between the GP, which is LandQuire management, and the LP, which is you as an investor, between 55 to 70% of the profit going to you. I will go over the different ticket size to get a higher profit sharing amount. Some of the comparable, you will see in our financial model that we're looking to acquire this parcel in Seguin at $10,000 an acre. We are currently under contract. LandQuire as a fiduciary already put the deposit within title hands. We are looking at a parcel that is basically priced half price compared to what we see on the market. Here are some of the parcels that we see in Seguin currently listed. I really emphasize that you should go on Zillow and take a look at the parcels for sale that are in the same acreage range, and you will see that we're not finding anything below 20,000 an acre. So whether you are interested to invest in the US or not, it does not really matter. What matters here is that we are acquiring a piece of property at a steep discount, and that we are forcing the appreciation within the next 12 months to basically resell it to developer. We're not basically competing with the open market. We are basically acquiring at a discount and forcing the appreciation, okay? So we don't have to wait for the market to actually pick up. We don't have to wait for the interest rate to go down. We are making our money when we buy and not when we sell. Some of the residential new build that are currently in Seguin with lots of basically half an acre. These are the homes that you can look. A lot of custom home builders are actually building in the area, and these are actual target exit buyers. Some of the lots that are currently for sale, you will see that in our financial model, we are looking to sell at an average of $65,000 to $70,000 per finished lots, and you will see that there is no lots for sale with the same actual access that are in the price range that we're looking to sell. So here you can see the lot for sale that are going anywhere between $79,000 to $99,000 for finished lots with utilities at the road. Some of the lots that are actually sold are in the $90,000 to $99,000. We also have one here that is that's sold at $50,000. That is only 0.4 acre. The management notes, again, here, we're really proud to announce our new portfolio. The portfolio that we announced at LandQuire has been curated after anywhere between 3,000 to 10,000 offers on a monthly basis. We have an acquisition team that analyze anywhere between 100 to 200 deals a month. We have anywhere between 20 to 25 LOIs that go out before we actually present a land piece into our board. And after it's approved by the board, we actually present it to our investor network. So just to give you an idea of how much work was done in order to present you that land deal, it's a month of work, it's a month of feasibility analysis in order to actually make you comfortable with grabbing all the information possible in order to reduce the risk for you as an investor. For people that already invest at LandQuire, you probably know our team members. For people that don't, feel free to actually contact any of them on LinkedIn and have a conversation with every single person in the management team, or even in our investor relation director team. So for people that know Willem is here and will be presenting the numbers in a couple seconds. Disclaimer, again, this is private equity. There's risk. This is why I emphasize for you to actually do your own due diligence. I really love having conversation with accredited investor, people that understand that the shares that you buy in the entity that acquired the land are illiquid. It's very hard actually to sell your shares until the land is sold. There's always a climate risk. There's always market risk. There is always risk that we can talk about, and it's really important to understand them so we can understand what is the potential upside and how do we guardrails those risks in terms of the entitlement and in terms of the market to exit. So going back to the initial slide of the presentation, I want to briefly show you the data room, which is a very important piece of information that we put for every single investor as open data. Transparency is key here at LandQuire, where you'll be able to see the comps. You will be able to see the contract that we actually have with the seller. We don't actually have people sign NDA because we're already on the contract. We already have a deposit. You will be able to see some footage of the property, some of the land ID boundary lines, okay? You will be able to see our OPCs, which is the opinion price construction coming directly from the engineering firm to understand what are the construction costs. You'll be able to actually get our latest plans, the power line easement, the tax history, the water lines, and the zoning ordinance coming directly from the county, okay? So go over every single document. We can go over it with you privately if you pursue a diversification play with us. And I will let Willem go over the numbers right now because this is probably the most important thing for you as an investor. And and for you to actually spend your time right now. Thank you. Willem, if you want to share your screen, the floor is yours. Can you hear me, Will?
Yeah, I'm gonna have you share your screen instead, if you don't mind.
That's fine.
I don't. Let me see. Or
it's okay. I can do it.
Wait, is it working now? Can you see my screen?
I believe this is mine that I shared. No, it's yours. Okay, we're good.
Okay. Good afternoon, good evening, everyone. Thank you for joining us today for our presentation, looking at the financial model that we've put together on the acquisition side. We're currently under contract for $1,050,000. Based on that acquisition price, we have a closing cost of 1.2% at $12,600. For the total carry cost of this project for the next 3 years, we have $8,400 in property insurance and $31,500 in property taxes. Then looking at the fees associated with the acquisition and the overall project, we have our due diligence, which comes down to $2,500 per lot, which is all the costs associated with our due diligence, including market research, environmental studies, and all pre-acquisition work that goes into the deal. Then we have legal counsel when it comes to our contracts at acquisition, but also when it comes to contracts associated with external parties involved, as well as when we come to the construction stage. Then we have a transaction management fee, an asset management fee, and as well the acquisition commission at 6% of the acquisition price, and the costs associated with the raising of capital for this project at 6%. And we're going into the fourth category, which is the land planning cost. So we will be working together with LGA, which we've been having great experiences with in our previous projects. Their costs for this project are coming in at $2,700 per lot. This is certainly below market average, where you will usually see that to be around $3,000. On top of that, we're going to need to obtain surveys and geotechnical report for our construction plans and exact property boundaries, topography, as well as doing an on-site tree survey. Then we have costs associated with the county and city, which will be reviewing our construction plans that will be submitted for review, as well as the final approvals and permits that we need to receive to get this project to shovel ready. On our end, we also do bi-weekly project management meetings regarding our projects going on and the progress that we're making, any hiccups that we might be running into that we'll be resolving while collaborating with LGA. And on top of that, we're always putting in a contingency for this project. We've put that at $50,000, which makes the land planning total come in at $430,100. That brings for phase A to take the project from where it is now to being fully entitled and ready for horizontal development. The raise for that phase A part is 52% of the overall project cost, which comes down to about $2.5 million for phase A. Then going down to phase B. So we've had LGA complete OPCs, the opinion of probable construction cost. They've put together these numbers, and on top of that, in order to be conservative and to make sure that we're staying within our budget, we've added on contingencies and extra costs to make sure that we're staying within the $2.3 roughly million for all the horizontal cost, with the capping of an oil well, the pavement, which is putting in the asphalt roads, the right-of-way grading that's going to be needing to be done, as well as extending an 8-inch water line from the front of the property all the way to the back. We're going to be obligated as well to put in fire hydrants. We'll be doing some, we have to put in a culvert in order to overcome a small creek that's located in the middle of the property. We've budgeted for that. And then the final item is electricity that's going to be needed to be extended from the road we get access from all the way to the end of the property, which is going to give access to electricity to each individual lot. And the same goes for access to public water. The end buyer, the retail end buyer, or a home builder is going to be responsible for putting in water electricity meters, as well as putting in septic systems, all dependent on the exact location of where that house is going to be built on these half-acre lots. On top of that, we're going to be required to put in a detention pond for drainage. We have to do some material testing. And like I said, we've included a contingency of 10% into the project to make sure that we're staying within budget, besides the mobilization and the general contractor overhead and profits that they would be having for overseeing this project, with an on-site project manager, as well as all the other items that they'll be working on their end. So the total for construction on the overall project is 48% at 2.3 million, which would take the total project for phase A and phase B to a total cost of $4.8 million, which is the total raise of the overall portfolio. And going more to the disposition side of the project, so we've currently put our pro formas together for 2 exit strategies. One, which is an exit once we are fully entitled, and the plan is, as we're going through that entitlement process, that we're already going to start marketing this project as a shovel-ready project to see if we can get developers or home builders to be interested in this project. So that would be a phase A exit. All the entitlements, all the approvals will be in. We would not be doing the phase B on the project if we would have the ability to go under contract while we're getting towards the end of entitlement. On a price per lot basis, we have 6 oversized lots at 1 acre, which we value at $45,000. For the half-acre lots, we have the ones that are in the front, that are fronting the road that's going to be extended throughout the middle of the property, which are going to be we value at $35,000. We have 73 of those, and then we have 63 flag lots, which we're valuing at $25,000. On that, we expect an exit at 4.4 million, and we have about 5% of disposition cost with brokerage, disposition, and closing costs, which brings the net to almost 4.2. The total deal ROI at an exit of after phase A, so not doing the horizontal construction, is at 64%, which would be around that 12-month time frame. Looking at the returns on that, so since we have a 10% pref that will be paid out first, and after the profit share between the GP and the LP will take place, these are the guaranteed pref returns on top of the profit share, which brings our total profit from pref and a profit share in the table here. If we're then looking at the overall ROI and IRR for investors investing in this project on a 1 to 2 year basis, we're looking from anywhere between an IRR between 22 up to 48%. depending on if we can exit this project within that 12-month period or at least up to 24 months. And from an ROI standpoint, we're between 44 and 48% on the phase A exit. Then moving over to an exit after phase B has been completed. So all the horizontal work is done, and we would be selling finished lots ready to be built by a home builder or an end retail buyer. Looking at those numbers, the 1 acre lots, we're at 90,000 per lot. For the flag lots in the back, we're at 62,500, and the front at 72,500. It brings our total overall project value at almost $9.8 million, with minus the 5% disposition cost. Our profits would come down to about 4.4 million, which brings the total deal ROI to 90%. We are expecting to be able to exit this project within a 2 to 3 year time frame, as we're expecting that construction will take us about 3 months, which entitlement and construction would take about 15 months in total, which then gives us the ability to start selling those finished lots. Then again, we have our pref to be paid, our part of the profit share for the investors, the combination of the two when it comes to the total dollar amount. And then looking at the ROI on a 3-year basis, we're looking at a 20% IRR up to a 34% IRR on a 2-year time frame at a 70% profit share. On an ROI basis, we're anywhere between 61 up to 68% after a phase B exit. Then quickly looking at the overall numbers, because this is also important, especially at a phase A exit, to make sure that there's enough margin in this deal to be of interest to developers. Looking at what we're putting in on a paper lot value, on top of that, the construction per lot comes down to $16,427. So the total, depending on the land cost, comes in anywhere between 41 and 61,000. Looking at the profit margin that's still in this deal for a developer to buy us out at a paper lot versus what those lots are worth once they're finished, on average is above 30%. Currently, the market average of a developer's margin are around 20%. So we certainly give enough room to those developers to have an extra interest in this project, also because of the margin and not solely because of the great project and the location that we have. Underneath here are the dimensions and the sizes of the lots that we're putting in for this project. So we're looking at the lots in the back that have a 20-foot right-of-way leading up to the back of the property where the house will be built. The total width is going to be 103 foot wide by 166 feet deep, which brings the total to about 22,000 square feet, which is roughly half an acre. The lots in the front will be a bit narrower, as they would need to leave that 20-foot right-of-way to the lots behind it, but will be deeper. So it will be 83 foot wide by 260 feet deep, which brings it around 21,500 in square feet. And then for our 1 acre lots, those will have that 103 foot width, as well as the full depth at 426 feet, which brings us to about a 1 acre in size. Then looking at the final numbers when it comes to the main road for that's going to be put in the middle of the property. So we're looking at a 70-foot right-of-way in which we'll be putting a 30-foot wide pavement. And currently, we haven't fully designed our drainage and detention. We do like to be conservative when it comes to estimating our lot count as well as detention ponds. We've currently put that at 3.7 acres, but we're expecting that to be a little bit less. So there might still be a chance that there are some lots to win on our final design, but in order to be conservative, we're putting our numbers together at 142 lots in total. And that's the everything when it comes to our numbers and our pro forma here.
Perfect, Will. Very good details. Thank you. Appreciate it. I'm just going to share my screen again and show a little bit the market, where we're located. And then we'll take questions. So just to give you an idea, guys, this is our neighbor that is for sale. So we're just right here. And this is a pretty good listing. We're 30 miles away from San Antonio, 15 from New Braunfels, 3.5 from Seguin, 25 from San Marcos, and 50 from Austin. So pretty strategic location for a builder. This is our neighbor here. We're just on Pine Meadow Road at the exit of I-46. So if I zoom out, this is Seguin. If I zoom out a little bit more, this is New Braunfels. Okay. Our portfolio 14 is actually on I-46, just right here. Okay, in between New Braunfels and Seguin. And obviously portfolio 17 is located here. You can see that there's a couple subdivisions being built on a much smaller lot basis. I think Lennar is here. So take a look a little bit at the market, what you can see for sale. What really strikes me is that if you look at the land that is for sale and you look at 50 acres minimum, you can see that there is some pretty expensive property that are much above 20,000 an acre. Our property, the fact that we're just on I-46, and that we can have people going to work to San Antonio and build custom homes and have obviously half an acre, which is becoming rare in a lot of the subdivisions that those big builders are building, is bringing a pretty interesting product on the market. Okay. So very excited about that. Very excited to move forward to talk about this project to developers once we're finalized on the capital raise. And really looking forward to have you join the project if you're looking to diversify in land. Obviously, land is one of these assets that have obviously a limited supply. But by buying land that are right outside of big cities, this is really where you can grab the fastest growing price. San Antonio has property anywhere between 20 to 30,000 per acre. We're acquiring this one at 10,000 an acre. And on top of that, you can see that anything that is located in Austin, Houston, Dallas, most of these properties are obviously at 50,000 an acre plus. So the upside is pretty good in terms of land price as a whole, and obviously the fact that we acquire at a discount and that we have a pretty interesting way of forcing the appreciation through entitlement is gonna help maximize the gains that we're looking to make on this property. So going back on the chat here, we're gonna take on question, Will, if that's okay. So Julian is asking, on average, how long does it usually take to exit a land deal in Texas? Obviously, on a deal that is just a land flip, typical land flip that we do without the entitlement, you're probably looking at anywhere between 12 to 24 months. But as soon as you have some entitlement work that it needs to be done, you already have a year of entitlement. So the fastest we would be able to exit is a year. And then it's just about finding the right buyer, right? Finding the right buyer could be right away by selling to a developer the whole project. A lot of these public companies, public builder companies are looking to obviously acquire size for the next projects that they have. 142 lots is definitely in the range of a lot of different developers in the San Antonio area. The latest deal that we exited to a developer sold in 30 months. That's the one I showed in Texarkana, Texas, which was obviously a much lower population. If you compare kind of the San Antonio area and the Texarkana city. So we're looking really to sell like any other project anywhere between 24 to 36 months. This is really where we can gain above average IRR for our LPs. What if the resale exceed 24 to 36 months? So we have contractually 100% of the proceeds that goes to investor, to LPs, if we do not sell the project within 60 months. The longest it took so far to sell a project was 4 years. We hope that we would never go above, but you never know what will be the market conditions in the future. This is why we try to buy in the fastest growing demographic state in the US. This is why we make sure to acquire at a discount so we can sell at a discount. Like Willem said, on a paper lot basis, we would be able to give a 30% discount versus the finished lots to actually motivate these buyers to come in and make a full cash offer. What are the main risks associated with this type of land entitlement deals? I think, Willem, you can obviously answer that question, knowing that you're working on the entitlements on a daily basis.
Mm-hmm. So when it comes to this particular project, we are right outside of the city of Seguin, so we're not falling within their jurisdiction and therefore unincorporated county land. We do have a zoning ordinance that we need to follow by the county, but as we are already going through our due diligence prior to actually acquiring the site, we already do an application meeting with the county. So the plans that you've seen earlier on in this presentation will already be discussed with the county in order to make sure that they're on board with our project. So I would say it's not an if this project would be approved, but more of a when. And as we're going through those steps of submitting our plans, making changes due to by the county. So I would say on that end, the risks are quite minimal when it comes to the entitlement on this particular deal.
Can you talk a little bit about environmental risk and what are the requirement for the road, for the fire hydrants, some of the traffic study? What are those things that you're used to work with?
So on the steps during entitlement, if we feel the need for a project to get a phase 1 done, we'll get that done to make sure that on the environmental end, it's checking all of our boxes. We'll have a traffic impact analysis done to make sure that the traffic that this project is going to generate on the main road that's leading onto the highway, what is the impact that we're going to have, and what are potential improvements that will need to be made. Those are all topics that we have already discussed with our engineers as we win our contract. So we're not expecting any offsite improvements to be needed. The fire marshals will also be reviewing our plans. So when it comes to potential fires, therefore, in our pro forma, in the construction costs, we put in the cost for putting in all these fire hydrants along the interior roads. And we have a 70-foot right-of-way, which is giving enough access onto the site, wide enough for fire trucks to be coming on, with a cul-de-sac in the end, which would give enough room to make a turnaround at the end of the property. So I would say those are all the items that we're working through as we're going through our entitlement.
Great. Well, again, if you have a more specific question in terms of the entitlement, feel free to send them in the chat. James is also asking, can international investors, non-US resident, participate? Absolutely. 90% of our investors are actually foreign investors. This is really kind of the niche business that LandQuire has. We try to find people that want to diversify in the US, but are not really on ground. And the fact that LandQuire can bridge that gap is actually why a lot of the people investing are offshore. If you're not satisfied with the developer proposal, how long do you think it will take to resell, and what will happen to investor in that case? Do you want to answer that, Will?
Yeah, I think so I expect that the question is regarding the fact that we're not meeting our target prices and therefore would not be exiting this project through a developer. So if during our entitlement we're not seeing the prices that I was showing on our pro forma earlier on a paper lot basis, we'll be continuing on to phase B and complete all the horizontal work in order to get to finished lots. I think on a finished lot basis, this project is quite interesting because of the following reasons. We have the ability to exit this project to multiple groups. So once we get to that finished lot stage, we have the ability to exit this project and sell it off to a retail end buyer, like ourselves, that would be interested in acquiring a lot and build their house on there. Besides that, there's multiple home builders active within the San Antonio, New Braunfels, Seguin area that are all continuously working on new projects that would be interested in taking part of the project down. And since the entire project would already be built out when it comes to the horizontal part of it, we can exit it simultaneously to different home builders, where if a home builder would be more interested in the lots in the back, they can take that portion. Another builder can decide to move forward with lots in the front. So that really opens up the spectrum on how we can exit this project after phase B is completed.
Great. Jesse is asking what's the possible ROI in terms of percentage. So we will send you the pro forma. Obviously, it's in the brochure. You click on the first slide when it says pro forma. But in terms of ROI, you will be looking anywhere between 40 to 48% on the pro forma if we sell it after 1 year. If we do not sell it, we will obviously do the phase B to allow us to sell finished product. And then it will depend if we sell it in 2 years or 3 years or even more than 3 years. But you will see that the ROI will vary anywhere between 57% to 77% for you as an investor. And then obviously on your taxes, we would have to study your personal case. If you invest personally under an LLC, if you're from the US or outside of the US, we always try to do a call with our CPA and your CPA to make sure they can understand what's going on during your investment. Nomusa is asking, where's the project? So the project is located in Seguin, Texas. Seguin, Texas is 30 minutes away from San Antonio. It's really where the main growth is happening, where there's actually land grab happening. There's a lot of land price going up because developers are trying to obviously build housing units. The environmental risk, we talked about it. We're not in an industrial zone. There's no really any environmental risk here, even though we do a study with our engineering firm. So if you have more specific question, we are able to answer as well. So I think we're coming to the end of the questions, Will, unless I forgot anything at the top. Nope, I think we're good. Any last questions? If not, we're going to wrap this up. It's been 50 minutes. Super happy you guys were able to join us for our latest portfolio. We're looking to raise the full amount before the end of October and to move forward with the acquisition. This year, we've been able to acquire portfolio 13, 14, 15, and 16. And we're looking to do as well portfolio 17. It's been an amazing year. I want to thank, obviously, the entire team working on the background here at LandQuire. A lot of day and night, response to seller, to engineering firm, to potential buyers. A lot of sourcing work done with our data team, our finance team as well. So thank you if you're looking at watching the webinar, and looking forward to present you the next one. Thank you, everyone. Willem, do you have anything else before we close up?
No, I think there's one question from Alexander that came in about what the deadline is to invest.
Yeah, it's going to be before the end of October, depending on the subscription that are coming. Obviously, it's really on a first in, first win basis. There is we can have up to 35 investors on the first class of action, and typically we don't have 35 investors because the average ticket size now is above $200,000, and a lot of people are now reinvesting in their second round with us at LandQuire, for people that started in 2022, 2023. We have the portfolio 9 exiting, we have the portfolio 13 exiting, so a lot of capital will come back between now and the end of the year, and really excited as well to have our investors resubscribe into new deals. So yeah, have a great rest of your day, everyone. Thank you, Willem, for explaining the details of the numbers, and talk to everyone soon. Bye-bye.
Thanks, everyone.